to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And I promise you, some interesting comments in the middle. Well, this is an eventful week. Usually I talk mostly about the markets, and I stay pretty clear from politics, unless, of course, politics have a chance of moving the markets in a big way. So when it affects the markets or our lives, I do tend to bring some commentary. It's not a risky call right now to say that it's Hillary Clinton versus Donald Trump when we come to November. Yeah, Bernie's still in it, no chance there. And Cruz and Kasich this week have suspended their political run here for president. It's not the first time, now that we have Hillary and Donald as the potentials, it's not the first time that we'll have a narcissist in as president of the United States. In fact, maybe it's really a prerequisite even to run. It's typical for people that are this way, is that they say something and then 5 minutes later they deny it, even though it's on video. They think they're so far above us that we won't even realize what they're doing. Or they'll say something will happen just because it's them, and they expect, because they said it, that it will happen. And so what is that? It's arrogance that is simply off the charts. The question is, what do markets think about this? Well, let's compare it as we look at what we have looking forward coming into the next 6 months, into the November election. Well, Hillary, here's the markets kind of know what they get, right? Obama 3 essentially with Hillary Clinton. Obamacare stays, maybe the biggest job killer that we have ever seen out there. Hillary, she will continue to attack the medical industry and the coal industry. Favors defense. You can see the defense stocks making new highs in here, and probably alternative energy. We'll talk later about, we think solar stocks are a buy in here. FOMC, they're going to stay in control for sure. Janet Yellen will be there. They'll continue building irresponsibly the levels of debt, debasing currencies, and causing huge economic swings and deflationary periods. Supreme Court, they will go strongly liberal, and socialism will grow in this country in a big way. The size of government continue to grow, debt continue to grow in a very big way, and the debt bomb continues to grow and probably explodes during the Hillary Clinton presidency. Donald, on the other hand, it's a little more gray when we think about that, though it is getting clearer. He's anti-free trade, though he'll tell you something else, and believes in tariffs. We are, in the United States, 4.4% of the whole world. Did you know that, population-wise? We need to trade with the rest of the world, the other 95% out there, and he could potentially shut that off, and that would be a horrible thing, wouldn't it? He says how bad the $20 trillion in debt is, and certainly does a good job putting blame where it belongs, and then on the other hand, he says, I love debt. And you know what? He says he won't even touch entitlement programs. So how is he going to do anything with the debt? He says he'll replace Yellen. Well, as far as I'm concerned, that would be a good thing. Get rid of the whole Federal Reserve. But then he says she's a low interest rate person, and Donald says, I'm a low interest rate person. So there you go. He will continue to manipulate the markets just the way that we have seen it happen till now. And we will get no free markets, no real pricing in the markets. And yes, low interest rates for as long as who knows. He says he wants lower taxes, yet he talks about policies that simply could explode the debt also. Mostly when you ask him questions about issues, his answers are typical. When I get there, I'll make a deal around them. Like he thinks he will have total control. It's classic narcissism to believe that you're better and smarter than anyone. And if anybody says differently, he'll just simply slap them down. We have seen that. I think he's right on many issues because I'm a libertarian and I'm a conservative, so I tend to lean that way. The problem is the way that he says it. And the biggest irony out there right now is that the people out there that really hate him, they hate him because they say he's a hater. Can you imagine hating somebody because he's a hater and then blaming him for it? Well, there's a big risk in there also, and that is, of course, that there's a huge division in this country when it comes to Donald Trump, and Hillary Clinton, and there's a potential in here as we get towards the election, or if Donald Trump is the president, is that we have an explosion in the inner cities and potentially kind of a mini civil war. So what I kind of think is that as we get towards the election, if Trump is in the lead, we could have a crash even before that happens, because Trump is, based on his policies, not anything that I can see that's a whole lot better than where we are right now. So summing it up, just in 2 words, we're screwed. I could feel that one in my gut as I say it. And I think what we're starting to see is the investors seeing the coming storm and beginning to batten down the hatches. We've seen the market start to reflect it. As it started to slip this week, buyers starting to come into the bond markets. And maybe the real canary in the coal mine was the gold market, which started at the beginning of the year around 1,050 and then spikes all the way up to this week over $1,300. So there is definitely some investors that are out there that are sniffing out these issues, and I think that they are starting to adjust to what they think is coming out there, and it really looks to me like trouble. So what happened this week? Well, we have a stock market that is down less than 1%, not that big of a deal, just giving up a little bit of ground. We looked for a market that would give up some ground this week, and maybe less than 0.5% for the stock market right now as we wrap up the week. The bond market, well, the bids actually did come in pretty strongly during midweek, but it seems to be stalling now. Here as we talk about it on Friday, bond markets rose past an area that we thought that they were a good sale. We actually do think that there is a pretty significant decline coming in the bond market pretty soon, pulling back in a big way. We'll talk more about that later on also. The dollar did get a bit of a bounce. We expected that to come late in the week or into next week. Overall, the dollar looks horrible. We think that bounces in there are going to be some trouble. And gold and silver choppy this week as they were really little changed on the week, moving up and down. Silver still looking monstrously strong, and we think silver, which has been the leader in here, will continue to be so. Let's take a look here at our 60-minute chart of the S&P 500 and take a look at what actually happened during this week. The gray area is the overnight area, and the white area is actually the trading during the day. We can see that bids did actually come in on Friday, as that was the peak on Monday, as that was the peak for the week, and then we got into this choppy decline throughout the whole week until it began to recover here late on Friday. The news that moved the markets, well, there wasn't a real lot here. On Monday, markets overnight got a bit of a lift in here. Euro, yen, and gold were all up. That usually does not help the market when those are up. World markets were mixed, Japan down, and for the E-minis, small loss in here became actually a big gain. On Tuesday, the yen and the euro jumped again. When they did that overnight in here, and oil did take a hit, that did bring some selling in on Tuesday, and you could see you got this pretty good selling. But then buying came back in here. The S&P's down 26, and then had a pretty good bounce in there after that weak start. And bonds did jump on the Aussie cut in interest rates. Wednesday, overnight, big selling came in there. You could see that. ADP came out, giving a little hint that the employment situation was weakening, slowest in 3 years. Productivity falls. And all signals are that growth is slowing in the U.S. That's when Cruz and Kasich announced that they are out, and yep, Trump and Hillary are the choices in there, and that's what we're facing. So we get in here a little bit of a rebound as we get an overnight rally in here, but the U.S. markets can't really hold on to that as we get this big drop in here. Oil really strong on wildfires in Canada, and that can't help the markets. That's really a tip-off when stocks can't rally when oil does, that there's some weakness in there, and the markets didn't like it. Here's a big drop in Tesla. We'll talk about that stock later on. 5% on fears about their cash burn, and Musk is very optimistic about production. We'll talk about later, and also that analysts really doubt that it can get the kind of production that they're talking about. And on Friday, really narrow markets, which we've had most of the week. China down almost 3%. The U.S. job growth comes out with a disappointing number of 160K. The U3, that's the headline number, is 5%. The U6, a more real number, but still not showing how bad it is out there in unemployment, is at 9.7%. A nice uptick in wage growth. They've been waiting for that to happen. Maybe that's why the bond market started to pull back again on Friday. Stocks down early and then reverse from quite an oversold short term to get that bounce that we see there on Friday. So a pretty choppy, mild downward week when we look at that. Let's take a look at our earnings and economic calendar for the coming week. This is a week where it's really slowing down after we get the employment situation comes out, and as we get past the end of earnings period, there's not a lot there on the calendar. So here's our earnings and economic calendar for the coming week. As far as economic events go, I don't see anything in here that is really a big mover for the market at all. As far as earnings go, we're going to talk about Solar City in coming segments. That's coming up right here. That one has really been a nightmare stock in there. Also, we're going to talk about CSIQ, which comes out pre-opening. And that's one we do like moving forward, and we'll talk about that one also. And we're also going to talk about JCPenney, which comes out Friday. That we don't have to tell you how negative we are and have been on that stock. But we're going to tell you about that later on as we get into the worst of the week. All right, that is it for the opening segment. I hope you have enjoyed that. Gave you a little earful as far as what we're looking at here for this coming election. And we're going to be right back with the best and the worst of the week. Best of the week. Well, it wasn't really that much of a decline this week in the stock market, and with a lot of earnings reports still coming out, you would expect that we would have still some big movers on the upside. That did not happen, actually. It was relatively small week for the stocks that did move on the upside. Biggest winner of all was Yelp, Y-E-L-P. We'll take a look at that chart, and you'll see in here that it had a big move, 23% on the week. Of course, this is a stock that's been big on the downside, moving from $86 all the way down to $14 before it finally made a bottom. It's been based on cycles in this rising period, you could see on that dotted line, and then turning up again this week. week right over there. Definitely short squeeze going on in here. I mean, massive volume. They guided their revenue up, and that really did, of course, help. And that gets you this big upside spike on what looks like it's going to be the best volume of the year. So when we get these breakaway gaps that you see right over here, those usually give you more upside, and we'll be looking for opportunity on a pullback in here to do some buying. So, and we would expect to get a pullback in there because this is just some panicky buying going on in there in Yelp. Another big mover with a breakaway gap, you could take a look at that chart, is Activision, not one we look at very often, ACTV, up 9% on the week there also. Strong move when you take a look at that. Another one we want to look at in here is Herbalife, HLF. It looks like there's a report out by the New York Post that they're coming close to a resolution with their issue with the FTC, so that stock gets a pop on that news, Herbalife. Let's take a look at that chart, and you'll see in here the good upside move in here, and what looks like a breakaway. Also, you can see in here it had this bull flag that's formed. Pretty classic look in there of a bull flag. We've got this big upside move there, and then it goes into a consolidation here, and then turns back to the upside. This is a key 89-day moving average right there. It couldn't get quite to it, and then moving back up. So nice volume coming in here too. And again, this stock looking like a nice little upside momentum in there. But when I switch over to the weekly chart in here, this has not been a great pattern, and this points to June, July as a period of correction. Some big resistance area coming right up across over here. We could see 66 to 70 being an issue for that stock, and pretty soon starting to roll over into a corrective period again. So can't be all excited on this one. This just might be another short squeeze. Take a look at CLX, Clorox. This one up 4% on the week in a better pattern, and moves up to a record high. Had excellent earnings report in here, and that looks to us like really the beginning of another impulse on the upside. Of course, this is a weekly chart. Usually when you get this kind of a pattern where it rallies and then fails at the highs and then makes a new low, then the next rally usually does not make the high. We're suspicious that it's not going to get a lot higher than this level over here. So you could see in here, this is 2 weeks into this rally right over there, and we would expect it to try to get up for a couple weeks back up over the 132.5 to maybe 134 area, but we don't see a lot more upside there in Clorox. So but a nice gain on the week and a fairly decent pattern. All right, that is, believe it or not, it for the best of the week. 330 stocks we look at, and we would say, as far as best of the week, this has not been a great week. And we'll be back with a lot to show you in the worst of the week. For the worst of the week, there is a lot more to talk about. Biggest stock on the downside this week of the stocks that I follow, well, that is Solar City. Man, it got creamed. This has been a stock that we have not liked, and overall the earnings outlook for this stock has been pretty bad, and we have seen the stock continue to gyrate up and down. I mean, this is a stock that essentially bleeds money. Take a look here at this chart, and you'll see in here what we're looking at. And other than this big rally that you could see right over here where they extended the tax credits, this stock has been really a bad stock. Look at what we're expecting in here. Loss of 913. It keeps getting revised lower for 2016. Still losses of 860 in 2017. Really bad action in there. And look at this big break in here. You could see the cycle rhythms in here. A terrible short rally and a big break. The same thing over here. It gets a good rally, but now, man, this looks like all the way out till July before this bottom is due in here. And this is really a stinky pattern in there. They're going to get some financing, but they're still have a huge losses in here. I expect that we're in an area where we're going to get a bounce. Take a look right over here. Based on these smaller patterns, you could see that highlighted cycle bracket right there, and we're at a point to get a bounce, but we think a bounce comes and you sell it. You can see in here earnings are coming out on Monday after the close, and maybe you get a bounce based on that, but I think if you get a bounce in there, you sell it. That is a really rough looking pattern in there. So Solar City, I mean, they're just bleeding money, forget about it. Cliff in the materials sector down about 30%. They had a big earnings pop and then failed in a big way, well below where it started before that big jump in earnings. Vale also down 17% as the miners all over the world really had some pretty big pullbacks. Triple D down 28%. That's the 3D printer, as their sales had a big miss. Their Stratasys also comes out on the 9th. That's Monday, and so we'll see some potential action in there, but these stocks have had some problems. Stratasys has a better pattern than Triple D does. Seagate STX down 27% on the week. Let's say that is another 27% half on the week. This has been a stock that has been absolutely getting bludgeoned, and this stock looks to me like a sick one that still has time to go, as there's been a pretty good slowing in the semiconductor category and in hardware, and those are really affecting this group, STX, Seagate, and Western Digital. Let's take a look at a couple of stocks that I have loved to hate, and that is Sears, SHLD, and JCPenney. They both had some news this week. Sears down 24% on the week. JCPenney down 17% on the week. These are, the old big box stores that just are just having a horrible time competing in a world of Amazon. This is a horrible breakdown pattern in here in Sears. They are going to close a lot more stores. They are just basically trying to survive. They've done everything that they could to do so, and this pattern is just a sick pattern. Gets underneath this important level. By August, this stock could be single digits the way this pattern is looking. Everything about this has got really weak momentum, and this is a sick looking stock. JCPenney has been pretty consistently on my worst stocks of the year list, or riskiest, and you can see in here it was my riskiest in the top 3 for 2014, and put on a rally, you can see there, in 2014, and then absolutely collapsed down to under $6. It did something similar here in 2015, where it had this rally over here. They're always trying to figure out, that they're going to raise money, turn this thing around, and then it falls all the way down here to $6 again. Now you can see what's going on here. See the big shooting star pattern right there that made the top? This particular pattern on the downside looks like it goes till June, then maybe a little rally, and then down again. We have believed this is a $2 stock, that it is going out of business. To do that, you'd really have to know that they're running out of money. Well, the report comes out that they are taking emergency means, essentially, to stay in business. And this big down week in here, 17% on the week on the downside. Take a look at the daily pattern in here, as it started out on the downside with this engulfing pattern. Here's where the positive momentum disappeared. Here's where the negative momentum came in, and here's where it breaks underneath that 89-day moving average. And way over here is where Piper Jaffray said it was the best pick for the year. I think it's going to turn out that if you didn't sell it in this rally, forget about it, because it's going a lot lower. This, to me, is a horrible looking stock, a really rough condition for a company, and I'm still calling for $2 or lower on JCPenney's. Next one we'll take a quick peek at in here is Navistar. They're down 23% on the week. You could see this breakdown here. We have a momentum turning to the downside there. Some support down in this area around $10. in Navistar. Here's an interesting pattern, and I said to support at $10. Here's some support areas also right over here. And note this. See this declining cycle bracket right there? That says that, well, it has maybe another week or two on the downside, but then this is going to be turning up again. We actually like Navistar here and think that it could get a pretty sizable swing bounce for about a month on the upside. So in this area of, we'll call it 10 to 11 and a half, we think that's actually an area that you can buy this stock in Navistar. GoPro, this is another one that's going south as it's down 21% on the week. Everybody was talking about their new product coming out. Drones. Can you imagine a drone up in the air with a camera that follows you everywhere and takes pictures of what you're doing? Wow, that's really some concept. Well, now they say that that's delayed and it may be coming out sometime around the holidays. In the meantime, they're having a hard time with their camera line and really being competitive and bringing out a good, strong line of products. So the GoPro down 21% on the week. We're going to talk about another couple of solar stocks in here. Sun Power, this one down 17% on the week. Take a look at this stock. This is a stock based on our analysis that we think is coming to a buy point. Now you can see in here, I'm just going to get a little closer look in here for you to see. Let me bring this down so everything is visible. And there you go. So this one you see is a real company. They actually really do earn money compared to Solar City. And these two big blue spikes, you see that right there? That's pointing to the time period that we expected a low to come, which is in the next week or so. This red bar is not a pretty thing. That says that, you know, this thing has not built its big base yet. But we actually think that SunPower is a buy in the next couple of weeks in this area of 15.5 to 17 in that area. And then we think we can get a nice pop up here into the 20s. So a low we think is expected in here. And if you look here on the daily chart, this has got a very interesting pattern in here, and you see that big green area. This is called an inverted hammer or a shooting star low. This says to us that this stock is very, very near the point where buying is about to come in, and buying actually did come in and it failed for today, but usually buying follows in there. So everything about this is pointing to us in SunPower that there is a bottom coming in there. One other stock that we really like also in the solar industry, and if you start thinking about the potential for Hillary Clinton being the next president and her being very pro-alternative energy, these solar stocks, if she's well ahead in the polls, are going to do really well anyway. CSIQ, Canadian Solar, down 15% this week. We have been very patient on that one, looking for a buy area, and we actually think they're going to report earnings this week, 5/11. I think that this stock also, CSIQ, is one to start accumulating pretty soon. We have to look at Tesla here. Man, this has been just a wild move for Tesla as it had a big spike on the upside based on all of those sales in their Model 3. And then amazing how it gives it up into what we consider to be a support area. This is a very busy chart because we have a lot of analysis on here based on our cycles. And here you can see in here that this stock had a big rally, of course, and then sells off into the support area. We actually believe that's this pattern right in here, and it is likely to pick its head up again and then a roll over. We believe that this is a support area and a good place for a bounce. But based on what we're looking at in here, the odds are pretty good that rallies will come and probably be steep and fail. In Tesla, the news in here is that their loss was smaller than estimated, but Musk came out with some really rosy production numbers, and analysts have been very critical about that. So what we want to do, take a look here as we'll look at the daily chart in here, and we'll get a little sense about how this pattern is shaping up. And we're going to need to go out to a 2-year daily on here to get all of this alignment in place. There you go. So here you could see again, this is all cycle analysis, and there is a rhythmic action in here that had a declining phase here and here. So what that says to us is that, as we just showed you on the weekly chart, we're getting into a bouncing area. What we expect to see based on this pattern, let me just take a much closer look for you in here, is a move into this minor resistance area. This is, we'll call it 227 to 233. It's now trading up on the day at 215.81. So we expect it to move up into that area as a worst case, and then roll over again into that corrective period that we are talking about. So we expect very choppy, big swings in here in Tesla, and this short-term support zone and the 89-day moving average coming across is likely to give it some support in here, and these cycles moving to the plus side, I would say that's pretty good. So we'll take a look here at one more stock, and I'm going to show you one that looks really bad. There's Tesla Weekly again, and here is Under Armour. This is a really bad pattern. So similar to what I showed you in Tesla, where you had a rally and a sell-off and then getting ready for another rally and a sell-off, getting ready for another rally, and breakdown from the resistance zone. Once you get under this level, it says decline all the way out here through July. We expect to see this stock well down into the low 30s in here. It's now trading at 39 in Under Armour, as they're down 13% for the week as the CMO resigns. So that says to me that their merchandising is, there's some issue about that, and that's been a case for them. Take a look in here. You'll see on the short term that it failed right up at the resistance zone, comes down to a short-term support. What we would expect it to do is to get a little bounce from this area right here, and we think that that's going to be a sell. So if it can bounce right back up to this 89, like right around $40 or so, 40 and a half, we think that's the sell, and it's going to probably go down pretty sharply after that. Also, energy under pressure, even though oil's been strong based on the wildfires going on in Canada. Oil did regain strength, but we think that's going to start to roll over again. So energy down 5 to 15% on the week. And that is it for a pretty long worst of the week. And we'll be right back with our short-term view. Short-term view of the coming week. Before we get into that, you've seen all my charts in here. Avi and I work on these all week long. We start out with a palette, essentially being the TOS charting platform, and then work on these all week and put in our cycle analysis that gives us projections for each of these 330 stock symbols plus 25 futures and ETFs, about 400 symbols. We focus a lot on what we call our focus group for our rankings and setups. And if you're interested in these charts, become a level 4 member, and then you'll be able to put these right up on your TOS platform. We send you a link, it's easy to install, and all of our work is right there for you to look at. Hope you become a level 4 member. All right, so let's get into this short-term view, and this is where we take an accountability of what we said in the previous week. We look at 5 different markets here, plus a VIX, the implied volatility, because there's so many option traders out there that watch our shows. And in this case, this week, we're going to give us about a 60 or 65%. We were pretty spot on as far as light crude goes and the gold market, though light crude gained a little extra strength because of these wildfires in Canada. The euro market, we're going to get about half credit in there. And S&Ps, we're going to be really tough on ourselves. and give us only half credit, because the rebound we expected to happen late in the week actually is just coming right here on Friday, and it's not quite as strong. So the VIX pretty much spot on in there. So we'll give us a conservative 60 to 65% for the week. We like it when we're above 65% for the week. We look at only the daily charts, though we take into consideration the intermediate and longer term patterns as we look at these charts. And we always start out looking at light crude, and we're going to do that right now. So here is the chart on light crude. When we say short term, we look at the daily chart, and we look at the cyclical rhythms in there. What we had expected was a decline to come of $1.50 to $2. You saw that happen right in here. Now, we got that rally in there when it came to light crude, right there when the Canadian wildfires really started to burn. That's a horrible situation right in there. It's just that it's not that big of an effect on the overall supply of oil in the world, and you can see that it tried to rally on that but really couldn't. So what we're expecting this week is a test of the 43 number, $43, which is right around over here, just on the downside, and then bounce. So we really think the slim ribbon is going to hold that area right over there, and then we get a bit of an upturn. You can see that in the rhythms in here. So this period over here could have been a pretty good decline when they're both aligned that way. You could see a similar thing right over here where that happened, and you got a nice break. But this sideways consolidation you have to read as bullish. So we're going to look for just a little early test down over here, and then moving up again for this week. We're going to call this actually a small change on the week, because right now oil closed at right around, or is closing right around the 44.5 area. We expect it to get down to 43 and then bounce back up. So that wouldn't give you a very big change on the week. And we're going to call a range right now of 43-46. When we look at that, and ultimately a pretty small change on the week. There's a little peek at what our weekly charts look at over there on the left, as you see that big green rising zone, and we're just at the top of it right now. So here's that daily chart in light crude, and we're going to switch over to the daily chart in gold /GC. And here, that is the weekly chart. We wanted to get over to the daily. There we go. So here we look at the same thing in here. Let me make sure that we are on a 2-year. Yes, we are. So all of the patterns are lined up properly. Note in here that what we tell is there's a lot of these charts that line up cyclically if you go only out to a 2-year daily chart. So we have that note in there, and gold is one of them. So on this chart we have a lot. Actually, this dotted line is silver right there. This dotted red line there is the GDX market, that's the gold miners, and then the blue ones right over here are actually gold. So you can see in here this silver dip in here, and we've gotten that little dip in silver. That's kind of influenced the market on the downside right over here. We were expecting that gold would test 1300 to 1308 for the week and then pull down for the week. It got up exactly to 1306. We thought the range for the week would be 1274 to 1308. It was actually 1270 to 1306. That's pretty much a bullseye in there. So now you can see slim ribbon still going up, and the silver market likely to start to gain some ground right in here. That says to us that gold is probably going to be stuck in a range right in here still. And then when these cycles turn over, you get a little bit more correction. That's about 2 weeks down the road, and then more upside over here. So this pattern in here is suggestive of a range. We're still looking for the 1270, 1308 range in here, and we think we're going to be pretty much stuck in there for the next week. No real action there. And also in gold, we're going to call it a small change week, as we believe that the rise in silver and the corrective process in gold will kind of fight each other, and that should keep it in a pretty narrow range. I'm going to switch over here to /6E. which, oops, that is not right. Here it is, 6E, which is the euro currency. We essentially use this as our proxy for the dollar. Now, what we expected was that the euro currency was going to be in a sideways chop in here, and the dollar was still going to struggle. We thought it would be a small change on the week in there, and it basically was a small change on the week. So it pulled down into this short-term support area, and we expected it actually to rally to 1510 and roll over. It rallied to 1610 and then rolled over. So we actually had the shape absolutely perfect in there. We didn't really expect it to get quite up as strong as it did right over there. So pattern exactly right. You could see that right in here. However, the magnitude of the advance we were wrong on. So we're going to give ourselves a half credit on that one. So you see it's come down in towards this support zone right now. We think it has a little more downside potential in here, timing-wise. So that says a little bit down. Maybe we get down just past the bottom of this short-term support and then get another rally in. We expect it to test that 1308 support and then turn back to the upside and then again into this minor resistance area. That minor resistance is 1510 to 1540. So you can see we're kind of looking at what we think are narrow weeks here coming up with similar patterns. So a little bit more down and then rally. That's what we have it drawn in. That blue dotted line in there is the bigger pattern. So you can see how the bigger pattern in here looks like this. That's the dotted line we have in there, this blue one. And then the smaller patterns are reflective of this right in here, and we think it stops at the resistance there and then rolls over again. So we do our analysis based on the cyclical rhythms and the support, resistance, moving averages, momentum indicators that we have to get this. So and that really is what helps us pretty much average above 65% as far as these short-term rhythms go in the market. So that is a look at the euro. Now, for the bond market, the bonds got stronger than we expected them to this week. We left the resistance zone up in here for you to see that we were talking about. Now, what I want you to see, and the reason I have this highlighted, these two yellow areas, see this big declining period over here? That's what this big thing is over here. So I'm giving you a little of the intermediate read. Note that it gave you this big shooting star, fell, rallied, and then fell very, very sharply. Here it gave you a double star, evening star, fell, rallied, now avoided going through that cycle peak resistance, and now is rolling over again. So that's a very similar pattern. We expected the minor resistance zone right over here, and let's remove that right there so that'll show. We expected that to be a sell area and for it to hold. It actually did not. It moved through in a stronger way, and that's related to the weakness that we've seen in the stock market. I'll blow that up for you to see. We think it's going to be really hard to get through this area right over here, and we think that it will start to roll over. We're going to call this week in the bond market a period where it rolls over and then begins to come down to test this area here, and then we're going to think we're going to get a zigzag downside motion out over there as we look further out. So for this week, our target on the downside, and this is conservative, this is not looking for a lot on the downside this week, is to test this support in the 10-year down between 130.04 and 129.27. That's that minor support. It could get worse. You note this line right down over here. That's what we call the cycle support line. And we actually think that there is risk that we get down there in the next couple weeks and start to turn over in the bond market in a big way. So we're in a window of time, for those of you that follow our intermediate patterns, for the next 5-6 weeks where there's a lot of risk in the bond market. And that's why we think this kind of double top that we're looking at is going to work. So as far as the stock market goes, what we thought last week was that it was rolling over for a correction and would pull to the downside. we made some points, and we did this in our Future Speak show on Wednesday, that the conditions of the market were weakening. We saw a breakdown in the NASDAQ, short-term patterns, and that because the cycle pattern, especially the one we're in right now, is lengthening out on the downside, that's got some negative messages to it. And the amount it gave up on the downside has negative messages to it. So now our read on what's going on in here is far more negative. And though we expect a bounce to come, we think it's going to fail, and there is a lot of risk that bounces don't last very long and we move to the downside. So let's take a look at the daily chart in the S&P 500 and do some explanation as to what I'm talking about. Now, I want you to note the repeating patterns in here: 15-bar rally or 15-day rally, and a decline of only 4 days. Right down over there of 19 days, a 15-bar rally right there, and then a decline of only about 4 days, a 19-day cycle right over here. These cycles have expanded out now to about 19 days. During this period over here, the NASDAQ did a lot worse and had a breakdown. Now, where essentially we are is that this is doing worse. It broke on the S&P below the 78.6 and even threatened that key cycle support. When you get that type of a pattern, the odds are very high that the cyclic action is forming a head and shoulders. In other words, there was still upside strength in here and you got a minor sell-off. This rally in here got right to resistance and then sold off hard all the way down. You see the head forming. And then we're anticipating that this rally doesn't get that far and rolls over, and this big downside takes over to extend this correction. We talked about the S&Ps giving up 80 to 100 points from their highs. So far, when you look at it, this low that we had here today was around 2040. That's already about 70 points from its high over there. We think it's easy going to make 100 points overall, as we think that this next rally in this week fails. So what we're looking for in the next week is this. In other words, we're right over here, and should get a push to the upside. Because of this big give up is where I believe it will not get far here. It could get slightly above that, but right now our conservative estimate on the upside is a rally in here in the S&P 500 to 2066 to 2074 on the upside. And there's a lot of risk that rallies will begin to fail fast. So we're looking for a minor up week, but it doesn't have to be that. It could have a few days up and then give it up very quickly. We think that the risks are mounting in here. And you heard us at the beginning of the show saying that we believe that the attitudes of investors are changing, and it could be very much on this political environment that we're in. So trying not to be too political after that opening statement, but you can see the shape in here changing. And if we're right about this rally, this bounce or rally that's coming up in here will probably not get you very far. We're going to look at that minor resistance area and see if that holds it or not on the upside. Or if rallies, really can't come very much at all. So we'll see. Getting a bounce here on Friday, and we'll see how that is. Now, we're looking at the VIX in here on the daily. And you can see we expected that the VIX was bottoming and beginning to turn up. You can see the pattern that we have in here drawn. We expect that the VIX will be choppy in here during this next week as the market starts to rally, but we don't think there's any significant downside. And when we look in here at this weekly pattern, we talked about how consistent this was, and every time you got to the point where these two cycles were turning up, as you see right over here, look at this one here, look at this one here, look at this one here. These are big declines in the market when this happens, and that's where we are right now, just at the beginning of it. So we believe that if the stock market does have this small rally that we're expecting in the next week, that's a time to be buying volatility, because we don't think that volatility will stay down very low. And maybe it's time to, if volatility falls, to buy some insurance on the stock market in whatever form that you think is right for your particular style. That's really our philosophy when we do all of our videos and we do our rankings and setups. We don't give trades, essentially. What we do is share our analysis, share our opinions about the markets and all of these 400 symbols, and share our knowledge, everything that I've accumulated over 42 years trading in these markets. We just hope that it raises your probability a notch or more and gives you enough of an edge to be better in what you do and make money, make it more peaceful for you, and have a happier life as the pressure comes off. So that's really our goal, and we hope that's happening for you and that what we bring here is a benefit to you. We look forward to your comments. That's going to wrap us up for the week. We hope you have a great weekend, and we are always wishing you great trading.
Well, I'm going to the city and I'm